Let's analyze Palantir stock today. Volatility has been increasing significantly, and we have very significant volumes at the levels of $27.50 and $27. We're approaching these levels, so the question is, what will happen after they are breached? I'll also show you the market forecast and what the market expects in the near future. Recently, Palantir stock has experienced several significant increases. There was a 75% rise, followed by some consolidation with a slight downward pullback that lasted almost half a year, and then another 40% rise. What will happen next? We are already at the upper boundaries of this stock, but still far from the historical maximum. Currently, the stock's market cap is $60 billion, which is quite high given its relatively small revenue. The quarterly revenue is $635 million, which is quite modest. What might happen to this stock in the near and long-term future? Let's find out. As usual, I rely on the volatility market, which will give us many answers. First, let's look at the overall volatility. As we can see, volatility is starting to gradually increase, especially at certain strikes. Volatility ranges from 55% to 85%, with some increase. This is primarily related to the upcoming earnings report on August 5th. After this report, it will be clearer where the stock might go. Now let's look at the volatility smile. We can see that the volatility smile is mostly skewed towards put options, indicating a bias towards stock depreciation. Investors and traders are pricing in a higher probability of a stock decline, with volatility on the downside increasing. This is normal as investors hedge against a decline by buying put options. However, the overall outlook suggests a potential decrease in stock price. Next, let's look at historical and implied volatility. Both are currently at the same level. On one hand, this is a good sign as it indicates balance, but on the other hand, it is not very favorable, because trading volatility is usually much simpler than trading stocks. Implied volatility, represented by the white line, tends to revert to its historical values, shown by the gray line, as depicted here. Hence, we can trade on the increase or decrease in volatility. How do we do this? I'll show you some interesting strategies developed by artificial intelligence. Let's see what it suggests. Here, we have different strategies. Let's take a look at one such strategy. We are advised to buy a 27-strike put option, buy a 28-strike call option for September, sell a 27-strike put option, and sell a 28-strike call option for October. This strategy is mostly geared towards volatility increase. While the strategy is quite complex, involving different expiration dates, different types of options, and different strikes, it needs to be managed properly. Buying and selling options make the strategy complex. But this demonstrates how you can play volatility using historical and implied volatility. Now, let's look at the trading volumes. As we can see, there are significant trading volumes concentrated at the $27.50 level, specifically for call options. This level is currently a very significant resistance that we have not yet been able to overcome. We also see large volumes at the $28 and $27 levels. In the near term, volumes are concentrated around these prices. Consequently, breaking through these volumes won't be easy, so the stock is likely to remain in consolidation until the earnings report. Additionally, we have a substantial volume of put options at the $27 level, which is right around the current price. To break through such large volumes, a catalyst is needed. Usually an earnings report can serve as such a catalyst. After the report, trading volumes tend to increase, and with high trading volumes, we may be able to overcome certain price levels. This is typically how it happens. Now, let me show you the market forecast for this stock. As we can see after the report, the market predicts the price to be between $25 and $26 on average. Essentially, this is the same price range as before. All information about derivative options is factored in here. Only after the report will we have new information, and the market will be able to make a more accurate assessment of where the stock might go. Let's look at the market forecast for September. It's the same $25-$26. However, if we look at the market forecast for the end of the year, we see a significant decrease, with the price expected to be between $21 and $23. This means the market anticipates a nearly 25% drop in the stock by the end of the year. Interestingly, the market does not expect a significant drop in September but does expect one by the end of the year. This discrepancy needs careful examination to understand the underlying reasons. I also want to remind you that I cannot predict price movements and don't know where the stock will go. My primary task is effective position management to develop a position so that no matter where the stock goes, we continue to profit. Let me show you one of the strategies I have developed. Let's take a look at what's happening here. As we can see, if the stock suddenly rises sharply to $50, we could make around $10,000. If the stock drops significantly, for example, to $10, we could also make around $8,000. If the price stays in the consolidation range of $25 to $29, we won't lose anything. While there might be some losses, they can be mitigated through proper position management. The option position looks like this. Again, I am not recommending you open this position. I am just illustrating how it might look. Any strategy, including this one, needs to be managed. This means buying options at the right time and selling options at the right time. It's crucial to manage positions wisely and avoid unnecessary actions as they can be risky. Now, let's quickly review the financial performance. As we can see, the company was unprofitable until 2023. After 2023, it started making money. However, its revenues still do not match its $60 billion market capitalization. This is very high, and while the company may have potential, the expected recession at the end of the year could cause the stock to drop back to $8. If the company doesn't go bankrupt, it will likely rebound and set new highs. For long-term investors holding the stock for 10 years, it will likely show good returns. However, serious declines are also expected, so it's essential not to put everything into one stock and to diversify. Additionally, I strongly advise against using leverage as it can significantly harm your portfolio. We should also closely watch the earnings report. If there is a catalyst, the stock could rise or fall sharply. Since we are already quite high, a correction is possible. However, predicting this is very difficult. Remember, I do not predict market movements. I focus on managing positions wisely. I have also started a new experiment with a zero-based portfolio where I demonstrate and explain how I manage positions. Be sure to check it out. Also, feel free to leave comments and ask questions, and I will try to answer all of them. Good luck to everyone.